Okay, guys, welcome back to my channel Training Express. Today is session number 8. But before we discuss session number 8, let's have a look at the answer to question of session number 7. Question was, if a business purchases computer for $2,500 on account, which account would be debit and which account would be credit? Answer is option number 2, computer debit, accounts payable, credit. Okay, today is session number 8, and today we are going to discuss T accounts or ledgers. Remember, when we talk about multiple ledgers or T accounts, we can call it general ledger. So today we will be talking about what is general ledger, how we can balance the T accounts, what is debit balance, what is credit balance, how we can write the ending balance of an account at the end of an accounting period. We will discuss what is trial balance and how we can prepare financial statements from the same trial balance. Let's look at session number 8. Okay, so in this session, we will be learning how we can prepare general ledger. General ledger is simply a collection of various T accounts or ledgers. In the last session, session number 7, we discussed 10 different business transactions, and each transaction was affecting different types of T accounts. In this session, we will be learning how we can balance those T accounts or ledgers. So let's start today's session. First of all, we will give the heading, business name, Stacy's Consulting, then general ledger, and then we can say the date, January 31, 2020. As I said, general ledger is simply a collection of different ledger accounts. So let's first of all look at the cash ledger. You can see there are different transactions appearing on the debit side and credit side. So how we can balance this cash ledger? First of all, we will total the debit side of the cash ledger. And you can see the total is $9,200. And now we can total the credit side of the cash ledger, and that is $3,200. Now it is clear that debit side is greater than the credit side. So how we can balance this ledger? What we will do, we will write the difference between the debit and credit side on the same side, which is greater. So you can see in this case, debit side is greater than the credit side by $6,000. So we will write the ending balance on the debit side of this cash ledger. Now remember, this balance of $6,000 is on January 31, which is basically the end of the January accounting period. But we have to remember that ending balance of current accounting period is equal to beginning balance of next accounting period, which means that the ending balance of January 31 will be the same as beginning balance of February 0.01. Now let's move on to the account receivable. So you can see account receivable, the total on the debit side is 3,700 and total on the credit side is 0. So let's write down the total of debit side 3,700, and you can see debit side is greater than the credit side. So we will write the balance on the debit side, which is $3,700. Again, ending balance of current accounting period is equal to beginning balance of next accounting period, which means ending balance of January 31 will be same as of the beginning balance of February 1. So now you will see in both of these cases, debit side was greater than the credit side. So what we have learned from this discussion is that whenever debit side is greater than the credit side, it is called debit balance. Again, whenever debit side of a T account or ledger is greater than the credit side, it is called debit balance. So at the end, let's again recap what we have learned here. We have learned that when debit side is greater than the credit side, it is called debit balance. Now let's continue our discussion of balancing the T accounts or ledgers. Here we are going to balance two ledgers, computer and furniture and fixtures. So you can see the debit side has got one transaction and the credit side has got no transaction. So what we are going to do, we are going to total each side. So let's total the debit side, and that is $1,200. Credit side balance is basically 0. So when we calculate the difference between the debit and credit side, our ending balance of computer on January 31 will be $1,200. We have to remember that ending balance of current accounting period is actually same as beginning balance of next accounting period. In other words, ending balance of January will become beginning balance of February. Now let's move on towards the furniture and fixture. Again, there is only one transaction on the debit side and there is no transaction on the credit side. So let's total the debit side. It is $2,300, and as credit side balance is 0, so our ending balance of furniture and fixture on January 31 will be $2,300. And we can't forget that ending balance of current accounting period is the same as beginning balance of next accounting period. Now you have seen that in both of these ledgers, debit side is greater than the credit side, and that is why we have written ending balance on the same side. So we can see here that whenever debit side is greater than the credit side, it is called debit balance. So let's recap what we have learned here. Whenever debit side is greater than the credit side, it is called debit balance. Now let's look at the next two ledgers here. We are going to talk about accounts payable and capital. Accounts payable, there are two transactions on the credit side and one transaction on the debit side. So as we have learned, we will be totaling both sides. So let's total the debit side, that is $1,200, and now let's total the credit side, and that is $3,500. Now in this case, you can see that credit side is greater than the debit side. So try to guess which side we will write the ending balance. You got it. We will write the ending balance on the same side which is greater. So in this case, credit side is greater. So we will write the ending balance on the credit side, and that is $2,300. Again, ending balance of current accounting period will be the same as beginning balance of next accounting period. Now let's move on to the other ledger here, that is capital. So we can see that there is no transaction appearing on the debit side, and there are two transactions on the credit side. So we can total the credit side, and that is $6,500. So it means we will write the ending balance on the credit side because this side is greater. So let's write down the ending balance on January 31, which is $6,500 on the credit side. Again, ending balance of current accounting period is the same as beginning balance of next accounting period. Now in this particular slide, we have seen that both ledgers have credit balance. So credit balance means that credit side is greater than the debit side. Remember, this is opposite to debit balance. Debit balance was when debit side is greater than the credit side, and credit balance is when credit side is greater than the debit side. So let's recap what we have learned here. We have learned that whenever credit side is greater than the debit side, it is called credit balance. Now let's continue our discussion for the next two ledgers. You can see we have here service revenue and rent expense. Let's look at service revenue first. On the debit side, there is no transaction. So it means the total of debit side will be 0. If I look at the credit side, there are two transactions, and the total of the credit side should be $6,400. Now, if we want to calculate the balance, we have to match both sides and take the difference. So we can see credit side has got $6,400 and debit side has got 0. So it means credit side is greater than the debit side. So it will be a credit balance. And because it is a credit balance, so we will be writing it on the credit side. So here we will write balance on January 31, $6,400. Now remember that ending balance of current accounting period is the same as the beginning balance of the next accounting period. So in this case, ending balance of January will be beginning balance of February. Now let's move on to the rent expense account. You can see on the debit side there is only one transaction, and on the credit side there is no transaction. So if we total the debit side, it will be $1,000. And because it is a debit balance, which means debit side is greater than the credit side, so we will write it on the debit side. So let's write down the balance on the debit side. So January 31 balance is $1,000. And again, ending balance of one accounting period will become the beginning balance for the next accounting period. Now here at the end of this discussion, you will see that when it comes to service revenue, credit side is greater than the debit side. So it will be called credit balance. And when we look at the rent expense account, debit side is greater than the credit side, so it will be called debit balance. At the end, let's again revise what we have learned here. We have learned that whenever debit side is greater than the credit side, it is called debit balance. And whenever credit side is greater than the debit side, it is called credit balance. Now let's look at the last two ledgers of today's discussion. You can see here we have got withdrawals and advertising expense. So let's look first at withdrawals. On the debit side, we have got one transaction, and on the credit side, we have no transaction. So let's total the debit side, and we will get $750. Now, because debit side is greater than the credit side by $750, so we will write the ending balance on the debit side. Remember, ending balance of one accounting period is actually the same as the beginning balance of the next accounting period. Now let's move on to the advertising expense. On the debit side, there is only one transaction, and on the credit side, there is no transaction. So let's total the debit side here. So the total is $250. Now we have to write the ending balance. So because debit side is greater than the credit side, so we will write the ending balance on the same side. So let's write down the ending balance over here. On January 31, we have got an ending balance of $250. Again, ending balance of one accounting period will become the beginning balance for the next accounting period. Now, you have seen here that in both ledgers we have got a debit balance, which simply means that when debit side is greater than the credit side, it is called debit balance. Let's revise again what we have learned here. Whenever debit side is greater than the credit side, it is called debit balance. Having discussed the debit and credit balance concept in detail in the general ledger, now it is the time to prepare our trial balance. Trial balance is simply a list of accounts in the general ledger with their ending balances. So let's look at the accounts which we have discussed so far. Cash. Ending balance was a debit balance of $6,000. Accounts receivable ending balance was a debit balance of $3,700. Accounts payable credit balance of $1,200. Capital credit balance of $1,300. Service revenue credit balance of $6,400. Rent expense, debit balance of $1,000. Withdrawals, debit balance of $700. And advertising expense, debit balance of $250. So these were the accounts or ledgers which we have discussed in the general ledger discussion. Now what we will do, we will take these ending balances and we will put them in a certain sequence. This sequence is defined by ASPE, which is called Accounting Standards for Private Enterprises in Canada. We will prepare the list in a certain sequence. First of all, we will write down all assets, then liabilities, then equity, then revenue, and then expense accounts. When it comes to assets and liability accounts, we write them in the sequence of liquidity, which means if it is an asset, we will write those assets first which are easily convertible to cash, or they are consumable. When it comes to liability, we will write those liabilities first which are payable in the near future, and the liabilities which are payable in the longer time we will write them after. So once we are done with the assets and the liabilities, then we move on to the equity accounts, which are capital and withdrawals. And once we are done with the capital and withdrawals, then we move on to revenue and expense accounts. Okay, so this is the time to prepare our trial balance. You can see that as per accounting standards for private enterprises, we have listed down our different accounts. First of all, we have listed our assets. And these assets are in the sequence of liquidity or consumption. If you look at the first one, that is cash. Cash is the most liquid asset. Next one is accounts receivable, which will be converted to cash when we will receive money from our customers. Then we have computer and equipment and furniture and fixtures. These two assets will not be converted to cash as such, rather they will be used in the business. After that, we have liability accounts. Right now we have only one liability, and that is accounts payable. Then we have equity accounts, capital, and withdrawals. After that, we have service revenue, which is basically a revenue account. And then we have expenses, rent expense, and advertising. Try to note here one thing. All the assets have debit balance, and we are writing the debit balance in the debit column. Withdrawals, debit balance, we are writing in the debit column. All the expenses, debit balance, and we are writing it in the debit column. On the other side, accounts payable is a liability, and liability has a credit balance, and we are writing the credit balance in the credit column. Capital is part of equity, and capital has a credit balance, so we are writing it in the credit column. And one more, service revenue is a revenue account, and it has a credit balance, so we are writing it in the credit column. Now at the bottom you will see, when we total the both columns, debit side must always be equal to the credit side. If it is not in balance, it means something is wrong, which needs to be fixed. Now this is the time to learn another easy concept of normal balance. As you have seen in the previous slide, that some of the accounts were carrying a debit balance and some of the accounts were carrying a credit balance. So normally all the assets, expenses, and withdrawals, they will be carrying a debit balance, which means their ending balance will normally be a debit balance. And on the other side, liabilities, equity, and revenue will normally be carrying a credit balance, which means normally their ending balance will be credit balance. So how we can remember these rules? Again, we can group them together. So assets, expenses, and withdrawals, their normal balance will be debit, and liabilities, revenue, and equity, their normal balance will always be credit. So here is the final summary of the rules of debit and credit. Here we are going to discuss the normal balance of each element of the financial statement. How we can remember them? Assets, expenses, and withdrawals. Their ending balances will normally be a debit balance. Liabilities, revenue, and equity, their ending balances will normally be a credit balance. Having discussed the concept of trial balance, now is the time to prepare financial statements. We will prepare financial statements from the account balances which are appearing in the trial balance. So let's first of all prepare the income statement. As we learned before, that income statement is always prepared for a specific time period, which in this case is the month of January. So we will take the service revenue, and then from this service revenue we will subtract our expenses of rent and advertising, and we will be getting a net income of $5,150. As you can see, revenue is greater than the expenses, so the result is a profit or net income. The second financial statement which we will prepare is the statement of owner's equity. It starts with the beginning capital, which in this case is 0, because this business was started during January 2020. During the month of January, additional investment was made by the owner of $6,500, which was shown in the trial balance as capital. Now we will add net income, which is coming from the previous financial statement. So in the previous financial statement, net income or profit was $5,150. So we will be adding this profit to our investment during the current period. And then in the trial balance, there were withdrawals. Withdrawals always decrease our capital or owner's equity. So that is why we will subtract withdrawals. Now if we calculate the net increase or decrease in the capital, you can see we have 10,900 increase in capital during the month of January, which is coming from investment of $6,500 during January, plus net income in the month of January $5,150, and minus withdrawals of $750. So this is our net increase in the capital during the month of January. Now we can calculate our ending capital, which is simply a total of our beginning capital and net increase or decrease in the capital. As there is no beginning capital, so our ending capital will be $10,900. Let's prepare our last financial statement from this trial balance, which is called balance sheet. Balance sheet is always prepared at a specific time. So we will prepare balance sheet as at January 31, 2020. You can see we have listed our assets in the same sequence as we listed them in our trial balance. Cash, accounts receivable, computer and equipment, furniture and fixtures. Total assets $13,200. Now we look at the other side of the balance sheet equation. We have accounts payable of $2,300. So total liabilities are $2,300. When it comes to owner's equity, we have got ending capital in our statement of owner's equity, which will be moved over here in the equity section, $10,900. So our total equity is $10,900 and our total liabilities and owner's equity will be $13,200. If you remember, in the first few sessions we learned that accounting equation has always to be in balance. So you can see our total assets are equal to total liabilities and owner's equity. Before we finish our session, I would like to remind you of the flow of information. First of all, we prepare income statement. Bottom line is net income, and this net income is moved to statement of owner's equity. Bottom line of statement of owner's equity is ending capital, and ending capital is moved to equity section of the balance sheet. Now at the end of this session, let me ask you a simple question. What is meant by debit balance? Option number 1, when debit side is greater than the credit side. And option number 2, when credit side is greater than the debit side. For the answer, please check out my next session. Okay, this is the end of session number 8. And let's look at what we have learned today. We have learned what is general ledger, how we can balance the T accounts or ledgers, what is debit balance, what is credit balance, what is trial balance, and how we can prepare financial statements from the same trial balance. I hope you liked today's session. Please stay tuned for more accounting sessions and don't forget to subscribe to my channel. Thanks for watching.